Willkommen zum Reinsurance Podcast, live aus Baden-Baden. Wir sind hier für die jährliche Rückversicherungskonferenz, wo sich führende Mitglieder der Branche versammeln, um über die neuesten Trends, Herausforderungen und Innovationen zu sprechen. Bleiben Sie dran für exklusive Einblicke direkt von der Konferenz. David, welcome back to the Reinsurance Podcast.
Thank you for having me back. Good to be here.
Indeed. Baden-Baden 2025 now. What's different this year?
Well, it's raining this year. As you may remember, Ben, last year when we were here it was sunny, so I don't know what's happening with that. What have you done?
I'm sorry, we haven't quite figured out how to control the elements.
Indeed. Yes.
Despite our obsession with them in this industry.
Yes.
Oh, but you're here with news. I see you've even brought...
I've even brought some accoutrements. No, in all seriousness, Baden this year is quite different from last year and the year before. We've published Who Dares Wins, and we've called it Innovation in an Era of Hard Market Softening. We didn't coin that term. It was coined during the last market cycle, I think here in Germany, actually,
interesting.
By a German CFO. But that's the phase of the cycle that we think we're in. And if you go around Baden right now, choose your metaphor, whether it's shifting sands or hard market softening or tides going in or out. The consensus seems to be that rates are softening, but from a very high peak. We're past that pricing peak.
Yeah, no,
as it were. Yeah.
It does feel like that's the sort of macro trend. Right? We've gone past that peak. We're coming down slightly, but obviously there's nuance in there as well to be found. Yeah, but.
Well, one of the nuances is what is it? Is it a soft market? Is it hard market softening, or are we coming off of a crest? And there are lots of different ways to measure it. You can measure it with absolute levels of rates online, for example, in property cat or casualty excess of loss. You can measure it by returns on equity or combined ratio. One way to measure it, though, is to look at economic value add produced by reinsurers.
Interesting.
An economic value add, if you, I can't remember if I've lectured you about this before, but it's the return on invested capital minus the WACC. And the interesting thing about this metric is that it correlates very closely with share price performance, but it's also something that converges around 0 or 1 over the long term. In 2023 and 2024, that number got up into the high teens for reinsurers, and we're still in the high single digits. So what we think that means is we think that there's still plenty of opportunity for reinsurers to create economic value while finding business with their cedants that makes their cedants happy, because cedants have had a very difficult time, particularly since 2023, with terms and conditions and pricing. So it sounds like something a broker would say, but we really do think that this is a market in which everyone can win. And if you think, if you have a long memory and you think back to the teens and the 2000s, you remember in the teens we used to hark back to 07, 08, and 09, and we would say that was the last time that we could really create value. Okay. I think that maybe 10 years from now, we'll look back on the 20s, the early and mid-20s, and say, yes, that was the time when we should have been in the market underwriting, creating value for our clients and for ourselves.
Yeah, really compelling, and I like this opportunity to create value in a hard market softening environment. Does that create opportunities for cedants and their brokers to do more deals, to do different deals because of that extra headroom? Or?
Absolutely, and this is the environment where you really need to be creative. If I was more agile here, I would show you exactly another arm. In our report, our brokers were actually brave enough to publish a structure chart, and it's very difficult for us analysts to get brokers to do this. But in that chart, we make suggestions around aggregate covers, around parametric covers, around different types of layers and solutions that we can bring to the market to help our clients transact. And that's what it's really all about in this market, is being creative, finding ways to capture that economic value for reinsurers and capital providers, but also finding ways to sort of mitigate some of the difficulties that cedants have been experiencing over the last several years. And again, we think that this is kind of a win-win market, at least for the near term.
Amazing.
Yeah.
And I guess we're at Baden-Baden now.
Yeah.
And David, you're one of the most well-traveled or constantly on a plane people I know.
Please don't say that. I don't want to do that, but thank you.
But what makes Baden a bit different, and what should people be thinking about post-Baden? What's this the signal event for, would you say, as people look forward?
Baden-Baden, and also I would say in perhaps in the United States PCI, and maybe in Asia Pac, the CIRC conference, this is where people really sit down and start doing deals. One could posit that some of the earlier conferences are a little bit more about posturing and getting ready and talking about high level stuff. This is where people really start sitting down and seeing, okay, what is the attachment point? How much are we going to retain? What is the cost? and what is the size of the program, and things really get narrowed down here. So I think that for me during this conference, and also in the weeks leading up to it, it's been quite evident of the direction of travel, perhaps much more so than a few weeks ago. Now, I'm speaking here in a broad brush. We can drill down into different lines, specialty, property, or casualty, or whatever, or ILS, but that seems to be coming out of Baden-Baden this time.
Interesting.
Yeah.
And obviously your headline, Who Dares Wins, we're looking at that in a whole range of spaces at the moment. Do we have the tools in the industry nowadays to take advantage of that opportunity? Is it changing year over year, data, technology, beyond?
Absolutely. Yes, I've been talking. It's funny because 5 or 6 years ago when I came to Baden-Baden, everybody was talking about data. Now everybody's talking about AI. And actually, the two things are very much related. Everybody now has AI on their phones. We can all, every time you Google something, you get a little summary at the top of the page now, which is actually really useful if you're talking to Cedants and you need to find out more about them in short order. But that's just generic AI that everybody has. In order for AI to be a competitive advantage, you have to have proprietary data that are homogeneous, structured, and unique to you. And that's what we've tried to develop in the NOVA database. It's what a lot of MGAs are trying to develop in different markets where capacity has left. And in fact, the other accoutrement that I brought was Agents of Change, which is the first attempt ever to quantify the European MGA market. And we quantify it by country, by line of business, and by class of business. And I can tell you there are some highly innovative MGAs in Europe that are working with data and technology to create comparative advantages and competitive advantages for their capacity. But it's not just limited to MGAs, it's also in the insurance and reinsurance sector. So we're seeing this emerge, and it's quite exciting. I mean, I think that the lunch that I had today, we talked mostly about how is AI going to change the industry. This is a big question. Certainly seems to, it'll disintermediate some of the early roles that I had in reinsurance. I mean, nobody's going to be keying in reserve triangles anymore. That's what I did first. So things are going to change, and it's just a matter of how quickly and how much.
And how vital is that MGA model for enabling the industry to figure out what insurers of the future might look like, I guess?
We think it's massively important. There's an argument about the MGA market because we've all been through different cycles of the MGA market. And I was actually talking to a competitor and friend on a panel a couple of years ago about MGAs, and I was arguing that this is structural, it's not cyclical. And he very jokingly gave me the dear boy treatment. He said, remember back in the 80s when we gave away the pen and it all ended in tears. And it's true. There's an element to MGAs because it is about capacity that is cyclical. But in Howden, we've always been extremely committed to the MGA market because we think it's a structural part of the change that is coming. And you can see that happening whether it's in wildfire, whether it's in cyber, whether it's in even long tail. You can see MGAs coming to the fore, offering technology and capacity, if you will, at the margin where it's unavailable. And then that capacity often becomes a bigger part of the story 2 or 3 years out. So we think it's structural. We think MGAs are here to stay. And we think they're an extremely important part of the innovation and data and technology that's going to be incorporated in the sector.
And I guess even from a higher purpose of the industry perspective, they're a good thing if they are stepping into gaps and finding ways to service risk that otherwise maybe the industry couldn't quite manage.
Clearly, and that's what's so important about our industry. We fill gaps and we service risk, whether it's with MGAs, whether it's with ILS. I mean, I'm thinking, for example, of the Danish Red Cross volcano bond that we did several years ago, where we are actually bringing capacity to people who need it, where it wasn't available before, filling that lost gap. And that's an important part of what we do. We need to make sure people realize that.
Amazing. And so thinking again, we're in Baden-Baden now. What are you going to be keeping your eye on over the next several weeks, and as you go through Cirque and beyond, and we eventually get to 1/1, what should we all be watching for?
Well, I'm watching. So it's really interesting. We try to be out ahead of things in terms of our house view. We've had a market thesis on casualty now for about 2 years, and I think people are coming around to our view on casualty, which is that the amplitude and length of the cycle this time are fundamentally different to what they were in the liability crisis, and therefore there's more opportunity if you have the right technology, underwriting, transactional capabilities, and placements, you can make money in casualty. So it'll be interesting to see how casualty develops, not just property cat, through to 1/1. Obviously, we are in the very back end of the hurricane season, which has been very quiet this year. So like everyone else, I'll be watching closely to see what happens in property cat. I think that will become very evident in the next few weeks, barring any catastrophes. But, the other thing that's so important right now that we don't look at closely enough, and I know that it's slightly academic, but interest rate movements, capital, and inflation, and even central banking actions. The last hard market was not caused by Hurricane Ian. It was caused by the several hundred basis point interest rate spike on the short end of the curve that drove dedicated capital down by 17%. And so really for me right now, if I had to pick an outside risk, that would be it. I'm looking at the macro fundamentals. I'm trying to understand what's happening with the Fed, what's happening with dedicated capital, what's the solvency margin of the sector, and how does that influence supply and demand? Because I think that's much more important than people usually realize, and it's something we should watch closer. So that I'll be watching that till the end of the year as well.
Okay, great advice. Stay close to your friendly neighborhood economist and keep an eye on it.
And we'll be coming out with our house view again on or around January 1st, so stay tuned.
Fabulous. David, it's been an absolute pleasure getting your insights here at the conference. And
Always.
Wish you the best with your continued travel and a very fruitful one ahead.
Well, the rain has stopped, so thank you, Ben.
Great to see you, David. Thank you.